But what do I think is happening with the Bitcoin price? Liquidity's drying up. TGA refill. I think there's a large part of the U.S. economy that is very illiquid. Capital is scarce right now. But what do I think is going to happen? I continue to believe very fundamentally that the U.S. government and the Federal Reserve are acting in a way of survival.
Hello everyone, this is BTC Insight and welcome to yet another deep dive into BTC Insight. Before we jump in, make sure to hit that like button and subscribe if you haven't yet. You won't want to miss this.
Mallers begins by addressing Bitcoin's recent dip of around 2.5%. For many, this was cause for concern. But Mallers, he sees it as a sign of health. To him, Bitcoin is not a stock, not a passive asset class designed to move in predictable increments. It is a reflection of liquidity in the global system. When liquidity drains, Bitcoin reacts. When liquidity expands, Bitcoin thrives. This ties into Arthur Hayes' commentary on the Treasury General Account, TGA. Think of the TGA as the government's checking account. To refill it, the Treasury issues bonds, effectively pulling liquidity from markets. Investors buy those bonds, and money that could have gone into Bitcoin, stocks, or real estate instead goes into financing the U.S. government. Once the account is full, however, that money eventually flows back into the economy through government spending, restoring liquidity and pushing risk assets, including Bitcoin, higher.
The United States is not cutting rates for jobs or for inflation. They are cutting rates to keep the U.S. Treasury alive, to keep the U.S. government alive, to keep the U.S. empire alive. The cost of that survival is all of you. I'm going to say that again. The cost of their survival is you listening to this show. You, your life, the things you can acquire, the family you want to have, the house you dream of living in. That is the sacrifice and the expense of keeping this empire chugging along. And so think through the framing of this rant as about survival, understanding the task at hand by the powers that be, and who they are shortcutting to get where they need to go. So, first chapter for us, I call the liquidity machine. So going into the show, everyone's like, Jack. I thought Bitcoin only goes up. Bitcoin's down 2.5%, which, by the way, come on, chill out. 2.5% is nothing in the grand scheme of things. But yes, Bitcoin took a dip. And I wanted to focus on, I actually think that this dip is very healthy. I'm very excited by this dip. I think this dip is good news. And I want to explain why and just the general trend of what's happening if we zoom out. So this tweet from Arthur Hayes, TGA refill almost done. Target is 850 billion. With this liquidity drain complete, up only can resume. Okay. Let's understand what's going on here. So the TGA, that stands for the Treasury General's Account. So what Arthur is saying is the Treasury General's Account refill is almost done. Think of the Treasury General's Account like what it sounds like. It's the it's the checking account of the U.S. government. The U.S. government's checking account sometimes needs to be refilled. How do they refill their checking account? How do they refill their bucket of cash? Well, they sell bonds, which is a way of borrowing money from the market. And so when the Treasury does that, what Arthur is claiming is they're draining liquidity out of the system because a lot of the capital that is in Bitcoin, that is in assets, that is floating around in the economy, then goes to finance the government by buying bonds. Does that make sense? And so every so often, the United States government needs to refill their checking account. And he ends his tweet by saying, once that's done, we can continue to go higher. What does he mean by that? He means we're going to continue to go higher because once the Treasury has their checking account full, they go and spend that money into the real economy. One of the biggest spenders in the economy is the U.S. government itself. And that capital finds its way into Bitcoin, into real estate, into the stock market, into gold, into the economy. And so the Treasury General Account is being refilled. That will suck liquidity out of the system. And I think why this excites me so much is Bitcoin continues to be the best expression of fiat liquidity, the best pulse, the best index, the best heartbeat as to how healthy the system is, where the liquidity is, all the way to the Treasury literally refilling its checking account, its money bucket. So just so you guys know, I think that there are serious liquidity issues within the market. We are living in two economies, as I've been saying on this show. There is the ultra wealthy, and then there is everybody else. There are scarce, desirable asset holders, and then there is everybody else. And we'll get into that in detail later in the episode. But the everybody else continues to struggle. The Treasury is draining liquidity right now. And I think Bitcoin is reacting to that. And as a Bitcoin holder, that's what you want. You do not want Bitcoin to be like the S&P 500, to be collecting a bunch of passive flows that backs the Treasury market with its bullshit 10% up every single year. That's basically more or less reflecting the increase in M2 money supply. You want Bitcoin to be the escape valve, the exit door, the pure reflection of the devil in the mirror. You understand? So let's take a look and deep dive a little bit into the high level. The high level, zoom out and take a look at the bigger picture. So I pulled up this tweet last episode. I wanted to resurface it. So it reads, in the month of August, the U.S. government collected $344 billion. Now that is from tariffs. So that is income the United States is generating, revenue the United States is generating, new revenue from this tariff program. Good for them. Just one problem. They spent $689 billion. So that is a $345 billion with a B, $billion deficit in 1 month. If you were to annualize that, take that $345 billion, you multiply it by 12, you're well over, $3 trillion of deficit spending in a year. Incredibly unsustainable. So why do I want to resurface this? Well, according to the Wall Street Journal, in September 2025, U.S. individual income tax payments for fiscal year have increased by 12% year over year, meaning the U.S. growth in the income that they take from all of us in taxes, the theft that they take from us via taxes. I just had a massive IRS payment. So the theft, the property theft that they are taking from us in the form of taxes grew 12% year over year. Another interesting stat is the U.S. money supply has grown about 5% year over year. So the money supply is up 5%. Tax receipts are up 12%. How the hell is the deficit higher? Guys, that would be the equivalent if you got a 12% raise, but your credit card bill went up anyway. If you're bringing in more income, if you are printing more money, the deficit is supposed to come down. Despite 12% year over year tax receipts, despite 5% year over year US money growth, despite tariffs, which brought in over $300 billion in a month.
Here's where Mallers gets to the heart of the issue. The U.S. is the world's reserve currency issuer. That means its role is to export dollars, to supply more to the world than it takes in. By design, the U.S. must run deficits. The only way to sustain this system is through constant debt issuance and constant dollar expansion. If the U.S. gave up reserve currency status, it could begin to solve its debt problem. But as long as it insists on keeping that status, the government has only a few levers. Either cut essential spending, like Social Security, health, or defense, or reduce its debt servicing cost. And that means cutting interest rates.
This chart is from Luke Groman. Okay, this is the blue line is gross federal debt as a percentage of GDP. Okay, you can see from the world wars until when we divorced from the gold standard, you can see this number go down. Now, if you look at the far right, Luke circles this little hitch, this little tiny dip, this little teeny tiny dip, because we want to get this down as a country. And look at his note here. It reads, note that this little drop in debt GDP from 2020 to 2022, so COVID, required 8% CPI, so record-breaking levels of inflation, 0% interest rates, and it aided by massive recovery from COVID and massive year-over-year SPX increase, so stock market up. So just to make that little tiny dent, that little tiny blip, that if that wasn't circled and I didn't highlight it to you guys wouldn't have even noticed. Just that little blip was record-breaking inflation, 0% interest rates, asset inflation through the roof, that then required us to have the fastest rate hike in the history of the United States, that caused all of our banks to fail. And I'm supposed to sit here and believe that we're going to drive this blue line down without real rates negative, without financial repression? Are you crazy? And the point, again, I've shown this chart a million times, guys. The point is this. What do you cut? Listen, we as a government are spending more than we bring in. As the world reserve currency issuer, our major export is the dollar itself. So we have to export more dollars than we import dollars. Think of it that way. Our job as the world reserve currency issuer is to give the world more dollars than we take in from them. I could tell the US government how to solve their problem. It'd take 5 seconds. Don't be the world reserve currency. Now, if you want to be the world reserve currency, if you want to prolong this empire, if you want to keep the show going at the expense of your people, well, then we have to cut spending somewhere. Let's look at this visual. Where do you want to cut? Health and Human Services? Social Security? Defense spending? There is one place where you can cut and you can kick the can down the road. It is the Treasury. It is the interest expense on our debt. So you have to understand, we are not cutting rates to stimulate the economy. We are not cutting rates in a reaction to jobs. We are cutting rates not as a supplement to the economy. We are cutting rates as a lifeline to the U.S. Treasury, to the U.S. government. If we do not cut rates and we do not bring this Treasury expense down, we will default. We will go into a debt spiral. It is over. Game over. GG's. Good game. Sayonara. See you later. So you guys have to understand this, because the mainstream media, the traditional bondholders that have been holding bonds for the last 40 years, they're writing this off as a political fiasco, that Trump is an egomaniac and he's in it for himself and he wants to control the Fed because he's into his own ego. And all of that may or may not be true. But I'm telling you right now, the economic reality, again, money is your time and energy in abstracted form. Money obeys the laws of physics, of Mother Nature, of the real universe. Money carries no opinion. A real money, a hard money, is truthful. I'm telling you the truthful economic reality grounded in physics. We have to cut interest rates, or else the U.S. government fails. That is why they're doing what they're doing. You have to understand that. And then we will understand the implications of that, what that means, who that's going to burden, and who that's going to continue to kill. But what do I think is happening with the Bitcoin price? Liquidity's drying up. TGA refill. I think there's a large part of the U.S. economy that is very illiquid. Capital is scarce right now. But what do I think is going to happen? I continue to believe very fundamentally that the U.S. government and the Federal Reserve are acting in a way of survival. They are on their deathbed, and there are a few ways out. Nuclear war, that's uninvestable. We're all gone. Or the exit valve is the US dollar, is inflation, is a tremendous wealth gap that ensues a ton of violence that we've been seeing recently.
So, what do we take away from Jack Mallers' perspective? The US is not playing by the rules we've been told. Interest rate cuts aren't about stimulating jobs or calming inflation. They're about keeping the empire alive. But survival comes at a cost. And that cost is borne by ordinary people whose wealth, security, and future are quietly sacrificed. Bitcoin, in Mallers' view, is the one instrument that reflects truth in this distorted system. It is volatile, yes. It reacts to liquidity, yes. But it is honest. And in a world where financial survival trumps fairness, honesty in money may be the most valuable thing of all.
That's it for today's look into BTC Insight. If you enjoyed this deep dive, hit that like button, drop your thoughts in the comments, and subscribe to stay on top of all the latest insights. Keep questioning, keep learning, and we'll catch you in the next one.